It's crazy to say, but I've traded altcoins for 6 years now. I publicly called Link at $3 before it went up nearly 20x. I publicly called Solana under $10 several times before it went up nearly 30x. There have also been several other altcoins that I have done just as well with. And today I want to share the exact strategies I've used to be able to find these gems. And if that sounds interesting, then stick around for this video. I'll link everything I share in the description below. Before we begin, there are 4 things you are going to need. First, I want you to know that this strategy is not complicated. Anyone can follow it. It's extremely simple. The difficult bit is going to be the risk management and the psychology of actually sticking to the strategy. 2, you'll need a TradingView account. The basic one is fine. The paid one is also fine. Next, you'll need a trading account. You can use whatever exchange you like, but just know that your funds are never safe with third parties. So only put on there what you need to trade, and also try to do research before putting funds on any exchange. My preferred choice right now for trading is Femex. If you'd like to trade there, you can use my link in the description below and get up to $6,000 as bonus. 4, nothing in this video is financial advice. I'm a guy with anime posters in the background making a YouTube video. Matter of fact, most people shouldn't be trading. It's risky and extremely difficult and not the magical life that gurus like to make you think it is. I love it. It replaced the video game addiction for me and has changed my life. So maybe a few of the people watching this video will benefit and be able to go down that path as well. I'm going to share 2 strategies that I really like to use. You can use both or just whichever one fits your trading style better. They use a few different basic tools that I've shared in my free technical analysis courses. If you're looking for any extra feedback or help, I do run a small Discord where my team and I help people as much as we can. It has limited capacity because we don't want too many members in there. You can check that out in the description below. Now, the first thing we want to do is find a crypto to trade. Building a watch list is actually pretty difficult and can be very useful if you learn how to do it well. I can make a video on this separately if you'd like. Just like the video, and if we get over 500 likes, I'll make this as my next video on this channel. So now I'm going to show you how I managed to catch a coin like Solana in the last bull market, not even early, because Solana had already pumped up from $0.5. So at this point, $5, let's say, late 2020, when I was looking at it as it was crashing here, the coin had already gone 10x. So just because a coin has pumped does not mean there isn't opportunity in it. In fact, I love coming into coins late after they've pumped because I get to avoid most of the risk. You don't know how many coins stay down here going sideways forever while everything else pumps. The first thing you want to do is actually look at Bitcoin. And there are 2 things you want to see on Bitcoin. Firstly, I want you to go to the indicators. I want you to type in free MA and click on this here. Then I want you to open it up and change it to these settings. And also change the colors for the culture. Right, so the first thing we want to see is these 3 moving averages fanning out on BTC, indicating an uptrend. Moving averages going up like this is the most basic way we can spot an uptrend. The next thing we want to do is actually look at the weekly chart and mark out some key levels. Again, if you don't know how to do this, I've made free courses that most people would charge thousands of dollars for, where you can learn how to make these levels for yourself. And then this gives us a general idea of the structure. If there are several very key resistances above and very few have recently been broken, then we're probably not in a powerful uptrend. We've broken 2 small resistances, and this market structure looks like a downtrend. Look, price is high there, less high there, less high there, same high there, low here, even lower here, and even lower here. Do you see that? That is a downtrend. So we look at the charts on Bitcoin, we make sure Bitcoin has a bullish market structure. Next, you need to keep up to date on market sentiment. You need some way of gauging that. That can be a community you're a part of. That can be following a bunch of people on Twitter and being very active there. That could be being subscribed to the right newsletter that keeps you updated on the macro markets. I'll leave links in the description for all of this below, but you need some way of keeping up to date with that market sentiment, because we want both that bullish macro structure and really solid market sentiment. These are the conditions where people get greedy, and these altcoin pumps are driven by greed. Now look, we've seen Solana has pumped pretty high. Next thing we want to do is set ourselves a nice key resistance. Now normally you're going to have one level deviating a little bit from your key resistance, and then a lot of price action under that. The price will go down sideways for a while and then head back up to that resistance, normally with a fair bit of momentum. Now, I actually missed this super early play on Solana. I did not get in at this point because this was early 2021. This is the strategy I used to get in on Link early, however, did not apply it to Solana at the time. I came in later with a different strategy that I'll show you in a moment. So we've got price going into this key level, and we're seeing a lot of attempts for it to break. What I'd normally do at this point actually is take my resistance level up because several wicks going in this place changes the data a little bit. So we see price trying to break, and now we get a solid candle close. What I like to do, and this is some alpha for you, is I like to wait for the moving average to get above it. So I want to see this 7-day moving average that I've set over here get above the price. And then the second that goes above it, let's go back a couple candles. This close here, I might even wait for one more. This here, confirmation, nicely above, signs of a breakout. So this right here is a price discovery breakout. We've got our key resistance at all-time high set, prices come down, consolidated for a while, and then with a lot of momentum gone into all-time high resistance. This is the break you want to catch in bull markets. And you can either do, now this is what I did with Chainlink, predictive accumulation. You can set yourself an invalidation point at this level, and an easy way to set an invalidation point is take your fib levels, and then you start accumulating above the 0.382, and you set your stop loss either at the 100-day moving average or the 0.618 level. I'm giving you several options because I want you to build your own systems out of this. I don't want you to blindly copy me. Make notes of every single step I'm sharing here, and then try them out yourselves and see what works for you. You don't even have to try it with real money. Just go backtest the charts. Once you see this breakout, you've got two options. Number one, you can just enter on the breakout. You can be okay to miss a little bit of profit in case it comes back down. And number two, you could wait for the retest, for the price to come back, and then you buy on the retest of all-time high. Normally, price discovery is not that generous, so I like to buy straight on the breakout. I don't care that I'm buying high because I'm expecting the momentum to continue for a long time. Now I'm actually going to share a more recent example of this strategy, one that's happened throughout 2022 and 2023. Matic has been a fantastic asset to trade and a great example of how you can apply this strategy. Let's let the price action play out a bit. You can see it's in a big downtrend coming down. Now it's starting to consolidate sideways after having a bit of a move up. We're seeing the price reject off this level over here, which is both the $1 psychological level and several data points showing that it's a key resistance. So we let this play out for a bit. And now that we see this price action, we also see that there isn't much recent resistance at all over here. So if the price breaks up, we may see some form of price discovery. So we're going to wait and try catch a breakout over here. Now here we see a big test and boom, the candle's gone above. Now we wait for that confirmation signal of this moving average. One more. And this is actually a very ugly candle. Normally you want to be a bit cautious if you see the second candle of a breakout of such a key level with a huge rejection like this. But for the sake of this video, let's assume you buy over here. And then price goes back up briefly and crashes below the level. Now I'm sharing this example to show you that it doesn't always work. So what do we need? We need a stop loss. We need an invalidation for this strategy. Regardless of whether we buy the breakout or we buy this retest over here, we need invalidation. And remember what I shared earlier, we can use our Fibonacci levels and perhaps take the 0.618 as our invalidation. Or if you want, you can also add the 0.786 and use that as an invalidation because we're not always going to win these trades. However, this does not invalidate our strategy. We simply take the price a little bit higher, this time to $1, and we wait until we get that opportunity again. You can see here, price is testing the level, failed to break out, take it a little bit higher now. New data points, confluent with that, confluent with these two, and we may soon get our breakout. That's the first candle. Zoom in, do we have confirmation? No. Give it another candle, boom, confirmation. Again, we're buying the breakout. Sure, there's resistance here, but our theory is that this is a deviation and this is the breakout level we're looking for. And we enter, stop loss would be at the 618 level, and we manage to catch another big move that's recently happened in Matic. This isn't 30x like that Solana example. You could have made up to 35% gains if you caught the breakout. If you waited for it to retrace a little bit, you could have made up to 50% gains on Matic. And all of this in about a month. Now it's time for strategy 2. See, strategy 1 gets you the most clout online because people are like, wow, you managed to call a coin so early. Now for strategy 2, I call this one riding the breakout. The funny thing is, I get way more attention for when I use strategy 1 and manage to call a coin very early. But I actually make the vast majority of my money with strategy 2, which I'm about to share now. After a big breakout, there are tons of opportunities to ride the momentum. You need a system that's going to follow the trend. The base hypothesis is that during price discovery in crypto, trends tend to horrendously overextend, especially in a bull market. My favorite means of riding this trend is with something I like to call trailing Fibonacci. And this is exactly how I got my best entries into Solana. When the price breaks out like this, you take your key level and then you follow the price with these Fibonacci levels. And you will look for a buy either at the 236 or 382 level. And your invalidation is the 0.786. And every time a new candle develops, well, this would have been our buy right here. We've got our stop loss at the 0.786, and we set our profit target based on a Fibonacci extension. It really doesn't matter which one you use. Here I'm picking the 0.618. What's important is that you are consistent with it so you can see if your system works. You can pick a 1-to-1 extension, you can pick a smaller extension. You don't even have to use the same places to buy and put your stop losses at me. That bit isn't important. The important thing is consistency, testing, good risk management, good psychology, looking for multiple confluent reasons, making sure Bitcoin's market structure is bullish when you're doing the strategy, making sure it's a proper all-time high price discovery breakout, making sure social media sentiment also matches, making sure there's a narrative around this coin. For example, Solana had a huge narrative of being backed by FTX, who at the time had a fantastic reputation. Not anymore though. And these all together are what let you take high probability trades. So if we keep going with price, you can see it goes up, it hits our target, and what you can also do is set up a new Fibonacci when the price goes up again, and you buy again, you enter again. Then, after you enter here and the price bounces again, you start another Fibonacci. I trail on this candle, I'm looking to buy at 0.236, 382, or even the 618, whatever you want. Another candle develops, price goes up, and probably would have got an entry there, maybe, maybe not. Maybe your system is a little cautious if there's this much volatility in a day. It really does not matter. You also may have noticed that we're going into $10, which is always going to be psychological resistance as a big round number. All of these intricacies you can weave into your own systems. And you can see here we would have had an invalidation. So what I'd actually do here as a bonus for you guys is I'd set a key resistance at $10, and that gives us another opportunity to look to play the big breakout. Bang, we got our big breakout. Wait for confirmation, came back down. And this is somewhere where you could have done a retest play rather than a breakout play, and boom, it's pumped 40%, which is a lot. Most people will say don't buy, but in these conditions, you buy high, you sell higher, and you've got your next breakout. You can trail this one again with the Fibonacci levels, and the price just continued to go up. Just keep applying these strategies. When it hits resistance, set the breakout, then trail it with the Fibonacci's. When the trend shifts, like it did here, stay out. You don't need to do anything. You can just wait until, like it did here, it hits another key breakout. Look, this is our key level over here that we're looking to break. Once we get confirmation of that break, we dive in, we ride the trend, we follow it with the Fibonacci's, and you can just keep making money again and again. Then here, the trend has shifted. You could have caught another breakout here and maybe made some profit, maybe not, but it doesn't matter because sometimes you'll win, sometimes you'll lose. That's part of the game. With good risk management, we'll make more money when we win than when we lose. Don't blindly copy these strategies. Go study my trading courses, understand these tools. Use my base ideas and hypotheses here to create your own systems. I have never met a trader who watched one YouTube video and then used that YouTube video to make thousands of dollars every single month. Unfortunately, it doesn't work that way. If it did, everyone all around the world would be watching one YouTube video and making thousands of dollars a month. This will require work, and it's maybe not martinis on a beach like gurus like to make you think, but it's a pretty beautiful game. It's a lot of fun, and it can result in financial freedom for a lot of people.